Welcome back, everybody. Welcome to Soar Financially, where we discuss the macro to understand the micro. And now we're looking at the macro again. With me today is Jordan Roy-Byrne. He's the publisher of the Daily Gold. And we're going to talk about what's driving gold prices right now, where his heart is at right now. And we'll talk industrial commodities as well, because he just gave a presentation in Vancouver at a conference. And I want to catch up with him a little bit what he was talking about, what are his or what are his recommendations in this market. We're moving into the summer, generally a slower season as well. So I'm really curious what Jordan has to say. Jordan, it's great to have you back on the program. Good to see you again, my friend.
Hey, Kai, thanks so much for having me. Always a pleasure to be on with you.
Oh, absolutely. Here, let me adjust your frame for a second. Let me do this. While we're chatting, Jordan. How's your mood? How are you doing?
Good question. I mean, I feel better than I did a couple weeks ago. Yeah, I would say, sentiment in general, it's not great in our industry. But I mean, with respect to precious metals, it doesn't bother me that much because I think we're setting up for something really special, not necessarily the next month or two, but I think it's a big move, a big breakout is definitely coming later this year. I think things are setting up really nicely. But we just have to get through, maybe a bit of a rough patch here in the summer.
So, are you invested in commodity stocks or mining stocks at all? Because your mood seems way too cheery.
Yeah, I would just mostly gold and silver stocks. I might have some other, I might own one or two other stocks that are not gold and silver related. But if you would have done an interview with me a week or two ago, my mood definitely was not, definitely was less cheery, you could say.
Yeah. No, and we're recording this on June 1st. So it's actually an interesting day because we're seeing positive momentum in the commodities, gold, silver, but also the industrial commodities. Like copper is moving up almost to 2% here while we're chatting. Where are we at here? We're at 370.28. That's insane. That's a big move. Jordan, we're going to talk sentiment here. Like we have to get a feel for what is happening in the market. As we're recording this, things are moving. What is moving the prices right now? And where's that momentum coming from?
Well, in the very short term, I would say it's probably a relief rally. I mean, you've seen a sell-off in commodities. I know that the dollar's down today, and then also in the last couple of days, I think that if you look at Fed funds futures and the odds of the Fed hiking in June, or is it July? I think they're meeting this month.
June 14th.
The odds of them. Yeah, so the odds of in the last week or so or a couple days, the odds of them hiking this month really plummeted. Like they were up at, they were around, I want to say like 70%, and they plummeted at least yesterday or the day before. They were down to 30%. So I think that is also causing a relief rally that Fed tightening might at least pause this month. And, that's generally good for stocks and all commodities. But in the larger picture, commodities are in a downtrend. And, if we're going into a recession, as I think most people believe, that's not a good thing for the majority of commodities. And so their recent price action, aside from today, it aligns with that view. So that's why I'm not bullish on commodities as a whole. And in our world, I mean, all you hear about is bullish supply demand. It's for copper, it's uranium. Like you never hear a bearish fundamental case. And so when you look at the commodity cycle, like there's a time when you want to play certain commodities, and then a time when different times for different commodities. Early in a new cycle, it's gold, then silver kind of follows. Then eventually, people get more optimistic about the economy. Then it's copper, and then energy comes in later. So we're at the end of that commodity cycle where you want to be out of everything that's not gold, basically.
Yeah, absolutely. And it was one of the Fed members mentioned that they'll pause, or they might pause Fed rate hikes in a couple of weeks because they can talk this week. But I understood that the Fed has a blackout period, so they can't comment anymore starting next week or so. It's interesting, like the little intricacies of the markets and what's moving markets here as well. While you were chatting, I pulled up the Fed Watch tool, right? And 71% or 71.5% actually says no change. Only 28.5% says hike. So that might explain some of the moves here. But Jordan, you mentioned silver as well, and I want to follow up with you on that. Is why has silver been trailing gold, and quite significantly actually? It's usually the more volatile of the two. But overall, gold has been up around 10% for the year. Silver only up 4 to 5% right now. Where's the discrepancy come from?
Well, gold hasn't broken out yet. Technically, gold has been in this big range for, going on 2.5, almost 3 years, you could say. And, when gold is in a larger corrective period or larger consolidation, unless you would have to have, I mean, I'm trying to think of the reasons why silver would outperform gold if gold's correcting and not breaking out. And there might be one or two, but really in the larger picture, if gold is consolidating and correcting in this, larger range that it has been for, beyond 2 years now, in that kind of situation or scenario, silver is going to underperform. Silver, I looked at the history of gold and silver, and silver's biggest moves basically were all during gold's biggest breakouts. And interestingly, usually the way it works, I mean, there's historical examples of this. Gold breaks out, past a key level, and then, be it, I don't know, it can be, a month or a couple months or 6 or 9 months after that, silver tends to break a key level. So we're not going to see silver really outperform gold until gold can clear 2050 or 2100 convincingly. Now, there's also a macro that goes with that. And so if you're, we're moving away from a inflationary environment as far as inflation being the concern. Inflation is coming down. However, if you look at core CPI, that's not coming down fast enough. So that still will be a problem. But the direction of inflation, the rising inflation, the rate of that has been coming down. And we're getting close to the point where people are going, or the market will be more concerned with recession than inflation. And so that type of macro scenario, silver will underperform gold. So that, I mean, that I think that, macro scenario aligns with what we're seeing in the charts and the statistics that you noted with respect to silver underperforming gold. So moving forward, I don't think silver will outperform gold anytime soon, unless gold can really make this huge breakout move in the next month or two. I think it's coming this year. I don't think it's going to be in the next month or two. So we're still going to have some time, I think, where silver is going to underperform gold. Again, the key is we have to see gold break above 2050, 2100. When that happens, and I was saying this in my presentation, when that happens, that's when you really want to be a big buyer of silver, because at that point, it'll already have started outperforming gold, or it'll be much closer to that point where it will outperform gold.
On that macro level, just Eurozone came out with inflation data again today as well. So inflation is dropping faster than expected, than forecast. And officially, Germany is in a recession right now. Like, we've had 3 months of negative GDP growth. That's textbook recession right there. Funny enough, nobody talks about it. I heard about it on Bloomberg, but then I checked all the local media. Nothing. Zip. Nothing on that matter. So I'm curious if that's sort of foreshadowing what we can expect in the U.S. as well. Do you have a prediction for us, timeline? Like, what are you looking at there?
Well, I will say I'm not an economist, so don't. I guess you could, whatever the expression is, take my words with a grain of salt. But if you look at historically all of the yield curve inversions, and then you look at a median or average time when the time from inversion to recession, the median to average in the majority of all these yield spreads, it tells you that the recession would probably hit in September. Now we're just looking at the median or the average, so it could be a little bit, before that or a little bit after. Now, if you look at the 3 month to the 10-year yield spread, what's interesting is if you look at the past, I want to say 6 or 7 inversions, like I think 4 of the past 6 or 7, it was 12 months or more, the time from the inversion to the recession. Now, I think based on that yield spread, I think we're in the 7th month. So at least 12 months, that would be another 5 months, which would put us in, I think it was from May. So it would put us in like October, even November. So I do think the recession could hit, in September, but it could also be as late as November, even December. So we're looking at, I think, the end of Q3 or Q4 for the recession in the U.S. And I mean, with these recessions, it's the same every time, in that everybody is talking about a soft landing before the recession. They're thinking the recession is not going to happen. Will this be the time that the yield curve is going to give us a false signal? But so what we're seeing, I mean, it's par for the course in terms of what you see before a recession. I think there's a lot of pandemic savings that have held the economy up. And so all of that is going to run out, I think, at the very end of the year. You look at bank lending, I mean, credit tight, you have all these things, and it's just the economy is like a slow moving, battleship or spaceship. And so, once it's moving towards a recession, it's not going to suddenly reverse. It's just a matter of time before we get there, and then, it's setting up where the Fed will have to ease policy at some point, depending on how bad the recession is, we'll get fiscal stimulus. So I think these are the things that are going to drive precious metals, and at least gold initially, to that breakout. And again, it's just a question of the timing. I mean, is it going to be in a couple months or 6 months or 4 or 5 months? But nobody knows at this point. But we'll definitely see.
There's a lot's happening as well. We just broke through $1 trillion in credit card debt as well. Major achievement for the U.S. And there's a lot of sarcasm on Twitter. It's like, yay, we achieved that. And but I look at here at trading economics as well. U.S. factory activity has been shrinking. All signs point in that direction. But as you said, like, it's tough to sort of forecast when that will be. Like, I'm probably agreeing more on the 4 to 5 month term personally, just looking how slow the economy has been moving. There's still a sea of liquidity out there. You mentioned the pandemic cash that has been sort of given out for free, but liquidity is tightening. So we'll have to monitor that, obviously. Jordan, like, one of the famous sayings is, sell in May, go away, come back in September for a time to remember, or something like that. Probably made up the second part, but
It sounds better the way you said it, actually.
right? Well, it's June 1st now. So my question is for you, Jordan. Did you sell anything in May, and how are you, sort of treading through the summer months now?
Well, I'm mostly a buy and holder. So, I mean, I probably should have sold, at least a few things, but I prefer to be a buy and holder. So
Yep.
I did not sell anything.
Absolutely. No, I'm with you as well. I just actually today I cleaned out some dead ducks in my portfolio. So I was like, let's get rid of some of them. I think 2 turned actually into a shell company. So great trading here. Good stuff. Like, one thing you said in your presentation as well is, like, buy gold, sell commodities, right? And I want to follow up with uranium in particular, because you highlighted it in your talk as well. I said you wouldn't buy anything uranium related for at least 12 months, right? Why is that? And to contradict your theory, because you presented on Friday, or Saturday, that was I'm terrible with dates, probably the 27th or something like that of May. So just not even a week ago. But now the U.S. said we're not importing any more uranium from Russia today, right? Macro event happened. Has that changed your thesis at all? And maybe explain that a little bit.
Well, I mean, I'm less keen on the other commodities than gold and silver, but it's a general macro view that we're going into a recession. If you look at the technicals on commodities as a whole, and uranium is kind of a niche market, but if you look at the technicals on commodities as a whole, I mean, they align with a negative or bearish macro viewpoint. I mean, especially copper, but uranium. I mean, I like to put that in there because I like to irk those people a little bit. I know there's quite a bit of uranium. Yeah, quite a bit of uranium fanatics. But I mean, I was bearish on it coming into the year. It has held up better, but I still think there's real risk in those markets. I mean, if you're going into a recession, that's going to be, I mean, not a soft landing, but a hard landing. It's just, I wouldn't want to own the majority of commodities. And so looking at the technicals on uranium, they're kind of iffy because they're just, the uranium ETFs are just hanging above support. And yes, they've sold off. I mean, they're trading quite a bit above the highs, but I'm not seeing anything really positive in those technicals. And so, I mean, if we're going into a hard landing, that would worry me that, I mean, uranium as well as copper, that those markets that there could be more selling to come. So it's not a specific, supply demand viewpoint. The stuff that you mentioned, I mean, most news the market already discounts in advance. So what you mentioned, that can be a little tricky, but I think it will get discounted quickly. And I don't think something like that, again, I'm not an economist or, a specialist on supply and demand in these markets, but I don't think something like that really is going to shift the larger macro. I mean, you could get a rally for a couple months based on that news, but I don't see it as like, okay, this is a catalyst that's going to start this huge new bull move. I mean, there will be one in uranium and copper, but as far as the timing, I disagree with a lot of people and saying it's going to take much longer for those markets to begin that next move. I mean, heck, for gold and silver, I mean, it's taken quite a while already, it seems. So I just think people have to be careful with commodities as a whole. It's not the time, but you can research and learn about these companies, and so you're better informed when the time comes. That's what you should do, rather than just indiscriminately buying things because the long-term thesis is so great.
So, buying the dip in those commodities or in commodity stocks as well is ill-advised at that point, or at the current point in time?
Well, yeah, personally, I mean, look, it depends on every company, because there might be a company you really like that has a great story, and maybe if I'm thinking that if the uranium stocks go down by another 30%, there'll probably be a few that maybe they only go down by 5 or 10%, or maybe there's one or two that could even rise during this period. So I don't want to indiscriminately say it's ill-advised to buy something, but just focus on the company fundamentals and individual companies, and just really understand that the larger macro fundamentals are not there at this point in time. Again, they will be, but I don't see that until probably sometime next year. And so it's important to understand that, when you're buying some of these markets.
Without giving away the secret sauce of your publication, obviously, but are there any charts that excite you, Jordan, right now? Be it gold, be it silver, anything that really stands out that we should maybe take a closer look at?
It's a good question. Obviously, the very long-term historical gold chart. I mean, we've set up this very bullish cup and handle pattern. And I mean, the cup was 9 years long. We're almost 3 years into the handle. And I mean, that's fine, because you can have, in a cup and handle, I mean, it can take, even a year or two ago, I was saying, I mean, it can take 3 or 4 years for it to break out. I don't think it's going to be 4 years. But it's a super bullish pattern. And, gold is setting up for this multi-decade breakout. And I'd like to add some more color, but I really can't. It's an incredibly bullish setup, and the implications, not only for the next, couple years, but the next decade, are super, super bullish. And we're getting really close to that point where it probably should make that breakout move. We're not quite there yet, but I just think in the big picture, it's just so bullish. And I think the macro that goes along with it, where you're going to have to see an easing of policy when inflation is at 3 or 4% versus in the past, it's at like 1%. That is super bullish for gold. And I mean, it will be for the commodity sector as a whole, but initially it's super bullish for gold. I mean, you're asking me about charts, and immediately I go into the macro because I want to put the two together. But that's really what I would say. I mean, I think the gold chart is the most exciting. And off the top of my head, I'm trying to think of some other charts. But really that for me is the big one. And I think gold is in a very similar position to where the stock market was in the early 1980s. I mean, so I saw a tweet that someone made like a month or two ago where gold is basically at an all-time high or very close to it. It's the only market that's doing that. And yet the broader sentiment on gold is really terrible, where no one really cares about it. People are skeptical about it. Like the mainstream generalist technical guys who I follow, when gold does well, they put it up and say, this is a bullish pattern. It could be a breakout. Then it sells off. They forget about it. But I'm just not seeing like the real excessive bullish sentiment yet. And it's really exciting, because it reminds me of the stock market in the early 1980s, which, I mean, I don't want to go, off on a tangent, but that's for lack of more than one answer, I just have to keep coming back to the gold chart, the historical long-term chart. It's in really good shape. And look, even if it takes another year for it to break out, that doesn't change my view. It's still in really good shape. And that's not my prediction. I think the breakout will come sooner. But it's
Okay.
we'll
To hone in on that, Jordan, like gold has been trading in ranges over the last 2 years. I think. Like I'm not a chart analyst, but I remember it's been trading between 1650 and 1850 for the longest time. 1850 being the top. Now it seems like we've reached a next level, the next stair step maybe. And where do you see the bottom of that next level right now? It seems obviously the ceiling is obviously 2068, I think, or 2080, the all-time high level. But where's the floor?
Oh, good question. For me, there's quite a bit of support, like long-term moving average support coming in around the mid 1800s, maybe a bit below that. You have numerous long-term moving averages that are all coming in together right now in the, I want to say like the 1820 to 1840 range, and those will, move up a little bit in the next couple months. If you also look at a 50% retracement of the recent rebound, that puts us at 1850. So there's quite a bit of long-term support in the mid 1800s. So if we were to see gold come down and make a bottom in that range and then make, a pretty solid bounce off that support, and especially if it looks like we're, a recession is almost imminent at that point and we're very close to the Fed cutting, that to me would tell us like we can see this big breakout in the next month or two. I mean, if you look at some of the recent breakouts in gold, like 2019 and 2007, for example, those occurred with the Fed cutting rates. So that's one thought I have, that when the Fed does its first rate cut, like that's when you could see gold make that breakout move.
Interesting. Okay, now I'm curious when that happens. It's like some people are saying, well, it might not happen this year, right? Really, really curious. Jordan, fantastic conversation as always. Thanks for shedding some light on what's happening right now and your forecast and outlook, obviously, as well. thedailygold.com, right? That's where we can find more of you. Fantastic. Because you're not on Twitter. You need to be on Twitter, Jordan.
I am on Twitter.
You are on Twitter. Why don't I follow? It's like I follow you. Hold on. We're recording this. Like I want witnesses. Hold on. The Daily Gold. Hold on. I am following you.
Well, I don't post a whole lot.
I was going to say last post 19 hours ago, Jordan. Come on. No, okay. I'm following you. But it's at the Daily Gold, obviously on Twitter as well. Jordan, again, thank you so much for joining. It was always a pleasure chatting with you. Thank you so much for coming on. Everybody else, thank you so much for tuning in. We hope you found this conversation insightful. I sure did, because it frames a little bit, and for some reason it solidifies my mood a little as well. Like, interesting that Jordan said the sentiment has changed, because it fits my mood the last couple of days as well. I see some of the stocks also moving positively. I saw quite a few good-looking charts this morning as well. Some of them corrected, but only from a very high, from a high. I'm curious to see where the next few weeks take us, because there might be a surprise rally this summer. And I'm going to have a few more guests on to discuss that as well, because it might be like a rally nobody witnesses or sees. We've had that a few times, that we had a rally in stocks and nobody participated. Right? So let's get ready for that. And then, of course, let's get ready for the fall. Follow Jordan, follow us here, subscribe, hit that subscribe button. Go check out Deutsche Goldmesse, which is happening in November again in Frankfurt. And follow us for more. Thank you so much, and we'll be back soon.